Gold tested a massive level on Friday. So in today's video, I'm going to show you some very simple techniques to trade gold this week using smart money concepts. We're going to run through things like some key levels to watch, also imbalances in the market, and how to really think about what you know versus what you don't know in the markets and how that's going to change the game for you. So trust me when I tell you, you're going to want to stick around for this because if you trade smart money concepts, or even if you're new to it, this is going to completely change the game for you. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of this is my opinion only and not financial advice. So guys, let's talk about gold here on the 4-hour time frame first of all. So I mentioned this over the weekend in the SMC Outlook video. If you saw that, that was kind of high level. We talked about a few things for this week that could come to fruition. Today though, I want to do more of a deep dive into the structure on the chart, how to think about structure, how to think about what you know versus what you don't know in the market, and really just kind of walk you through more of a data-driven approach versus thinking about things in terms of your opinion or what you think might happen in the market, okay? So first of all, let's take a look here at gold. Let's go to a daily time frame and talk about this because obviously gold was in a massive uptrend back here, right, for years, okay? Now, since January, we've seen gold pull back, lower highs and lower lows. Now, anybody looking at this here since January and telling me that this is not a downtrend, okay, in my opinion, they're wrong because there's no other way to look at this than the fact that we have lower highs and lower lows. Yes, we did have an uptrend back here, but if you are buying gold on the simple fact that, well, it's gold and we've rallied for years and this is just a healthy pullback, that's fine. However, that's more of an investment. That's not a trade, okay? So in terms of a trade, we have to look at things like the 4-hour and the 1-hour timeframes. And what we talked about over the weekend was that we did have a new breakup structure on Friday, okay? So let's run through this in terms of what we know versus what we don't know. And that might sound kind of, high level and how is that going to help me? But trust me, like I said at the beginning of this video, this is going to completely change how you look at markets. So what we know about gold and what we know about any market is that when we get a breakup structure like this, we know that this tells us that sellers remain in control. Now, it doesn't tell us that sellers will be in control a week from now or a month from now, but it does tell us that based on what we have right here on the chart, okay, in other words, data, the data is telling us that sellers remain in control because we had this low back here. And Friday, we got that big sell-off and we closed below this low. Okay, so from an SMC standpoint, from a structure standpoint, this right here tells us that sellers remain in control. So the very first thing for this week, going into this week, is that sellers remain in control, okay? So that's the very first thing about this. Now, before we go on to guys, if you do want to see exactly how I trade SMC full time, then check out the link right here on the screen. That's going to provide you with a free SMC training. It's 2 hours long. It's not content you're going to find on YouTube. So trust me when I tell you, you're going to want to check that out because it tells you exactly step-by-step how I trade SMC. And it is completely free. So check that out here on the screen. If you don't see it on the screen, then look at the description below. And you're also going to find a link to my recommended broker. So check that out as well. Okay, so we know that sellers remain in control based on that breakup structure on Friday. So that's the very first thing that we know. Now, the second thing that we know is that we have this imbalance from Friday as well. So an imbalance like this, we're going to call this 4,400. Okay, so this area right through here. Now, when I say 4,400, I'm referring to this entire area, basically these two candles here on the 4-hour time frame. Now, what an imbalance is in the market and why it matters is an imbalance like this shows you an inefficient auction. Okay, so what this means is that on Friday, sellers completely took control. Now, it doesn't mean that there were more sells than buys because you can't have more sells than buys or more buys than sells. That's not actually possible. Okay, however, what it does tell you is that sellers were much more aggressive than buyers on Friday. And so this created an inefficiency in the market. And markets do tend to revisit areas like this here. Okay, notice these two candles on the hourly as well. Markets tend to revisit these because it's an inefficient auction. And if you're a market maker, you want to have efficiency, okay? You want to have the most efficient market as possible. And a way to think about this is, let's say I had $10 million and I wanted to short gold. And on Friday, I wasn't able to because the market just completely ran away from me, okay? And I wasn't going to chase this because I've got a large amount of money that I want to put into a short. Well, I wasn't able to do that. That's the inefficiency, okay? So if you're a market maker, you want to have that liquidity, okay, that money in play, right? Why wouldn't you? You want to have as much liquidity in play as possible. So when you get moves like this here from a market, that's why they often revisit these because again, market makers want to have as much money in play as possible. So you do get markets, tending to revisit areas like this. It doesn't mean it has to happen, but you do often get that. Now, from a trader standpoint, okay, let's first of all update this, and then we'll talk about this from a trader standpoint, because from a trader standpoint, okay, we want to obviously short high, and that's going to matter in terms of that imbalance that we saw on Friday. So we're going to call this, okay, 4,400 is an imbalance, okay? And that's an unmitigated imbalance because we haven't revisited this area since Friday. So that's the very second thing. That's the second thing that we know here about gold. Okay, so the third thing that we know about this is that because this is now a BOS, okay, so on Friday we got that push below this low. This was our BOS. Where is the protected high in this case? And it's very easy to find. All we do is we take from this low over here to this point where we broke down, and we say, okay, what is the highest point within this box? Okay, if we were to box this out, what is the highest point within this? And again, it's very easy to find this high right back here. So what I mentioned in the SMC Outlook video is that this high right up here, okay, so if we snap it right to this high, what you're going to see here is that basically 45.95 is going to be the protected high. Again, this is another factor that we know. So let me label this out too. Okay, we're going to call this what we know. All right. And so number 3 is going to be that 4,595 is the protected high. And I'm going to label this as such. Okay. So we have protected high right here. All right. So those are 3 things so far that we know. Now, what we also know here for gold is that if we look at an hourly time frame and we go all the way back here toward this low, and I've talked about this before, but what you're going to notice here is that this hourly candle, we do have this long lower wick. Now, areas like this don't have to be retested, but oftentimes when you do see displacement like this out of a low, and you see a wick like this on something like an hourly or a 4-hour time frame, then you do get the market tending to revisit this area. Okay, so I'm going to say that 4160 is also an imbalance, and that's an unmitigated imbalance because if you'll notice here, if I move out, what you'll notice is that from this low down here, we never came back here to revisit this. Okay. So we also know that, again, 4160 is going to be an imbalance. And like I mentioned about 4400, we know that that's significant because markets often revisit those imbalances. Okay. So we're going to say 4160 is an imbalance. Okay. Just like number 2. So those are the things that we know. 4 things. Okay. Now on the surface, it might look like, okay, well, that doesn't tell me that I should be shorting now or buying now or whatever. And that's okay, guys. We don't have to know what to do right in this moment, because what you'll notice is that gold right now, following the Friday breakdown, okay, right now, the market is in potentially, okay, I say potentially, it's in potentially a local bottom mode here, all right, putting in what could be a local bottom. I mentioned this in the SMC Outlook video as well, that if you're trying to short this market, okay, trying to short a downtrend like this, you've got this imbalance back here. We know sellers remain in control. We know this is an imbalance. And we also know as traders, we want to short high. So we don't have to know what to do right now. We don't have to know that. We have to be comfortable saying that we don't know if we're going to get this. We don't know if we're going to get this. All right. And that's okay. What we do know though, is that if you have a rule, which I do, that I have to short high, in other words, I have to short in premium, then that area for me is up here. Okay. Now, the other thing that we don't know is if we get the move up here, whether it be from current levels or a bit lower, if we get the move up here, how do we know that this is going to be a lower high than this up here? Okay. How do we know that this is going to be a continuation and not just the market coming up here to mitigate this imbalance and then just continuing higher and taking out these highs? Okay. So here's how we do that. Again, data driven. We're not talking about opinions. We're not talking about, well, I think this is going to happen or just guessing. What we're doing here is we're using data. And the data I'm referring to is, let's say in this case, we get gold rallying from down here. Okay. And I don't know if this is going to happen. Again, I'm not here to forecast, guys. If we get the market rallying up here like this, what I'm looking for, okay, at this point, so let me move over here. If we get something like this, what I'm looking for, again, using data, right? We don't have to sit here and guess. We don't have to think, okay, I'm just going to blindly short up here and hope for the best, because we don't know if the market is going to top out there. Again, we're talking about what we know versus what we don't know. So what we can do here is using data, data-driven approach. If we get the market then taking out the low like this, okay, then that right there is a signal that we have a potential local top in place. So in other words, if we come up here, this is our imbalance. If we come up here, mitigate this imbalance, and then form a change of character on something like the 15-minute time frame, that's going to be your data-driven approach that this is now potentially another lower high in a series of lower highs that, again, we've pretty much seen all year. And especially if you go back here toward the hourly, we've seen lower highs and lower lows, since this high right back here in April. Okay. So that's how to use data here, okay, to justify looking for shorts up here on a mitigation of this imbalance. We're not just blindly guessing. We're not saying, I'm going to short here and just hope for the best, put my stop somewhere up here. Because the thing is, if you get this, then you're shorting through here, your stop is up here, and look where your target is, way down here, guys. That from a risk reward standpoint, that is ideal. Okay, again, I'm not forecasting. I'm not saying that this is going to happen because this is the part that we don't know. All right, so that right there would be the data-driven approach to look for shorts around 4,400. Could be a little bit higher, could be a little bit lower, but all we would have to see is a lower time frame change of character. Now, this up here is the protected high. Remember, 45.95. So we know this. We know this. And what this means is that if gold were to start taking out these highs up here, okay, that could be a sign of a slight bullish shift. However, this is the high back here that would have to be taken out in order for this to be a local bottom. So knowing that, basically everything through here, okay, if we were to get up here, there's nothing bullish here. And this is what tends to happen. And let me show you something too. This is what tends to happen. Let's look at a 12-month time frame. Now, this might seem crazy, okay? However, understand that each candle is 1 year. So this candle that you see right here is 2026. Now, you might look at this and say, well, this is a bearish looking candle because look where we're trading, look at this long upper wick. But you have to understand that there's over 6 months left in this candle, okay? So what I want to show you though, is that right now gold is testing its 2026 open, okay? And that's significant. So typically when a market retests its yearly open, especially after months have gone by, buyers are going to come in and defend that area. Hence the reason, if you look at this here, this level, all right, so let's look at this on something like a daily time frame. If you look at this level here, this low right back here, these lows, this was the 2026 open. Notice how we bounced. We wicked below it, we bounced. We tested it on a Friday, we bounced, okay? So 2026 open, that 2026 open is going to be significant. However, this is where traders get themselves in trouble because they see that alone and they think, okay, we're going to bounce. I'm going to buy here and hope for the best. And that is not a data-driven approach. That is simply just seeing one level on the chart, buying and hoping for the best. And that is not a strategy. Okay. Or at least it's not one that's going to make you money over the long term. Okay. So yes, it is testing the 2026 open. That is significant. However, that is not enough to go out and buy a market. That's not enough to have a full strategy. There's no strategy out there that's like that, where you see one level, the market tests it, and then you just buy or sell and you're profitable over the longer term. That does not happen, guys. So we have to use data here. Yes, the market is testing a critical support level, that 2026 open. That is the level down here around 4,300 where gold is bouncing right now. But from a structure standpoint, okay, from a data-driven standpoint, these are the things that we know. This is going to be it right here, right? These 4 things. So that is all we know. We don't know anything beyond that. And again, that's okay. We have to be okay saying we don't know something. So for gold, all this to say, guys, that right now we know sellers remain in control following that breakup structure on Friday. We know that 4,400, this area up here from Friday, okay, is also an imbalance. We also know that 45.95, this high up here, is the protected high. As long as gold is below that, then there's really no reason to get bullish here, in my opinion, because we are below that protected high up here, showing that sellers remain in control. The other thing we know is that 41.60 is also a potential imbalance there from that recent low from a few months ago that we looked at. Okay, so right now, guys, I am looking for shorts only. However, what needs to happen here for gold in order for me to short this market is I'm not going to short low following this kind of move. I'm also not going to short a market when you have an imbalance like this just above it. Okay, that makes no sense in my opinion. It's also against my rules. And so what I have to see here at a minimum is you look at the high up here, down here to the low. I have to see the market tap into this area up here. Okay, so above this, into this region. If we get that, and then we get that lower time frame change of character, then I'm looking for shorts down here toward this area. If we get this though, and we don't get that lower time frame change of character, and we just blow right through this with higher highs and higher lows, then there is no short, guys, and we're coming up here to test these highs, potentially taking these out. All right, so what we know right now, guys, is that gold remains bearish. We know that this is an imbalance up here. However, I do need, if we see this up here, I do need that confirmation on the lower time frames in order to get short. I truly hope this video helped. If it did, subscribe to the channel, keep it locked in here, and also check out the video right here on the screen. That's going to run you through premium, discount, and optimal trade entry, which is going to help you immensely in your SMC trading. So trade well out there, and I will talk to you again tomorrow.